There we go. Hi, this is Simon, take two. It is 9/4/2019 at 1:54 p.m. Past performance not indicative of future results. This is for educational purposes only. Let's see, you can lose a lot of money trading futures, right? The idea here is that I'm sharing my trade plan with you in hopes it'll make you a better trader. However, following me blindly is a bad idea. I do lose money when I trade sometimes. However, not often. And that is my 2 cents. My total focus is on leveraged day trading, which means I have to have a higher degree of tolerance for setups versus if I was trading low leverage or no leverage, right? So the theme behind this is how to take your smaller scales trades and turn them into bigger swing trades. That's the idea behind it. And there's a couple components that go into doing that. So let's get rid of this and start with that. And let's use yesterday and the last couple of days as the concept or the idea. So first of all, let's start with the volume profile and the TPO, which is where all my trading starts from. And we'll use ES from yesterday afternoon. And what we will do so that I do not have to destroy this chart is we will duplicate it. And then that should be up in just a second. And then we'll be able to easily use it. I don't have to worry about losing all my work for tomorrow morning. And in the meantime, while that's loading. Okay, so first of all, the idea of a volume profile and TPO profile. I do teach people how to use TPO and volume profile. However, Jim Dalton does a great job of explaining how to use it along with several other people out there. Mind Over Markets is a fantastic book, about as exciting as a physics book, but it is a fantastic book to use for trading. And secondly, I do not necessarily use TPO and volume profile the way others do. I've come up with my own methodology over the years that works very well for me, right? So it's not all textbook, but there's a couple of things that are textbook, right? So let's look at yesterday when we start off. Number one, I'm going to throw out all the data from this 9/2, right? 9/2 was a holiday trading. The volume was very light. The profile, as you can tell, looks bizarre. We usually don't get this kind of profile. And that's the result of holiday trading, right? But what I'm looking for in the profile when I start off a day is, number one, where are my swing lows and my swing highs? That's important because that gives me a sense of where the ranges are. I can look very easily, and you can tell almost immediately when you look at a profile, the nice part about the profile. And guys in the room, if y'all have any questions, just hit me on Slack if anything needs clarification. Hold on one sec. Feel free to fire the questions away. But the number one thing you'll see is like, hey, we're in a big trading range, right? That's super easy to see right now. And right now we're pushing towards the top of that range. And we could push all the way back to the bottom of that range. But that's why when you look at people and you go, hey, I'm super bearish or hey, I'm super bullish, it's super nothing, right? That's literally, we've just been in a trading range. We're off the highs, but we haven't gotten crushed. We've established a credible low. And if you look carefully, even within that, we have started to make higher lows all the way through here. So that's a good piece of information to start with. Secondly, the middle of this range, stuff that becomes very easy to see quickly, right? So you look and go, okay, there's the low, there's the high end of the range. This is the middle of that range. To really be bearish and break down, that tells you a good piece of information, right? To be bearish and break down, you're going to have to be below 2870 right now because that's the middle of balance. In order to break balance, we're going to have to be trading below 2870. In order to get the chance to break the 2818, right, we're going to have to come down and set a new low, right, just at least a lower low. We're going to have to break below this 2818. This is a naked volume point of control and a naked TPO point of control. And if you don't understand it, just reference Mind Over Markets or shoot me an email at some point. They're not complicated concepts. It's simply the point at which you either spent the most time or the most volume on a particular day, and it has not yet been retested since it's been established. And I have a couple of rules around that. That's pretty much the gist of it, right? So when we're looking at yesterday, the number one thing you'll notice is there's a couple of key things. Again, this is all from Dalton. None of this that I made up. As a matter of fact, almost nothing that I have is originally from me. It's almost all made up. This is when you have a gap away. That is Dalton's gap fill. Dalton considers that the most important place to take a trade in the market, right? So if you'll look from, remember we're taking out Monday, right? Monday doesn't exist. So on Tuesday, you'll see we came right down to Dalton's gap fill, and we responded. So when looking for big trades to start with, that was an important clue. Now there's two steps to that important clue that everyone has to realize, right? Number one, A, you have to be aware that Dalton's gap fill is important. B, you have to be prepared to take the risk of taking that long and how you're going to manage that trade, right? So there's things to consider. Because I want to show you that, I'm going to switch over for a second. If I look at Dalton's gap fill yesterday, it came in at, let me pull this up. And just bear with me, I'm going to run this more like a coaching session than a webinar trying to promote anything. But that's 28.90.50. Right below that, you have the 50.60. So you know this whole area, right? It'd be fair to say from 28.90 all the way down to 28.70 is a great place to look for potential longs, right? That's step one, okay? But from there, things can get complicated, right? So number one, I don't trade off of a 5-minute chart. I have it up on my screen, but I do not trade off a 5-minute chart, okay? When you look at when we came into 28.90 yesterday, this is my 5-minute chart, and you'll see that we came into it right at the bottom of a huge rotation down, which I believe was some type of news. I have no idea what drove it. I don't care. Maybe it was econ. But the first challenge you have is when you're looking at that, let's say you do trade from a 5-minute chart, right? Of course, now we look at it and go, well, of course I would take the long there, right? But if you look at it like this, like really, two things could have happened. First of all, if you try to tag it right at 28.91, you may have not gotten filled. Problem one, right? Problem two, well, of course you would have taken it. Well, I'm sorry, I've been around trading for a long time, and I know every screw up I've ever made. And when the market starts opening like that, huge to the downside, again, I always use the example, right? If I'm $1 million trader, if I have $1 million account and I'm trading one contract, it's very easy to take that trade, right? I know that support. I know between 28.90 and 28.70 that is support on ES. That equals $1,000 to $1,500 a contract. And if I have $1 million, I do not care if that contract gets stopped. So then it's very easy for me to say 28.91, limit long, or even 28.92. I'll run it front, limit long, one contract, 28.92, stop 28.60, right? For a total of $1,600 in potential profit. If you look at that, you go, but yeah, but who does that? Well, hey, I can tell you, there's definitely people who do it, right? Why not? Why wouldn't you if you have that kind of capital and you enjoy trading and you're not necessarily trying to knock it out of the park? That trade rewarded them from that 28.91 to a 29.10, right? Almost 20 points. They didn't get quite 1-to-1, but they got a lot of the risk off, able to get a lot of that risk off. And by the next day, they were at 29.33, arguably a 1-to-1 RR with absolutely no heat, right? That doesn't work for me because I'm a leveraged trader, right? I'm trying to get great entry. I'm trying to take as little heat as humanly possible, right? And then I've got to figure out, once I have that trade, how do I hold on to it? And let me tell you, there's a little trick with that, right? Because the first thing you're going to do, at least first thing I'm going to do, is I'm going to do this, all right? And what I'm trying to establish is why this is both difficult and how, and I'm going to give a workaround solution to how we work around it. So first of all, I'm kicking most of that trade. If I only have one contract, all of that trade at the 50 retrace. I'm like, 50 retrace, I'm out. But then you have to figure out, are you going to take the other side of that 50 retrace, right, from here to here? And come back on the other side. Are you going to take that long again? How do you know that's not going to break? Because you got to remember, we don't have the benefit of looking to the right. And the other part is, in order for the trade to work itself out, right, you had to go all the way through the day, hold it all the way overnight, get the gap, and then let it stretch up after the gap when it looked like it was potentially rolling back in to do a gap fill this morning, right? And that's the part that no one tells you when they're telling you, hey, you can make $1 million day trading and this is how you do it, right? So they go, well, it's simple. Look, I had this marked as support, Dalton's gap fill, mid of the half gap, etc., etc. And these are where you should take your trade, and it's easy. But it's not so easy, right? So now let's go and cut back. If we look at the profile, I had to accomplish two things in order to get higher. Number one, so remember, This doesn't exist for me. This day's gone. So the top of the open window is right up here. This is Dalton's gap fill down here. This is all empty space. Of course, what I would like it to do every time is come right to the tick. Now I could take that with no heat, load up as many contracts as I humanly can buy, and then watch it press all the way up to the upside. Let me see if looks like I had someone in the room. Someone's sending me a question. Hold on a second here. Just RTH sessions, correct, Brian. So I do not use the 24-hour on almost anything. I almost always use US session, right? So the first thing I'm trying to do is come back and get the gap fill. But next, right, my logical targets to the upside, I have nothing in here that can block me from going up. I have this anomaly. Anomalies, again, this is all Dalton. I didn't create that. Good support areas, you couldn't get to it, right? This doesn't exist for me. So this is my first target. And then right here, right where we are right now, this completes the auction up in ES. See where we're running into problems? There's no anomaly behind here. I've got to come back over here and look back to the left. Let's change that color so I can look back to the left easily. Right? Back to the left and see what's up there. And when I look back to the left, what I see is if we don't fail at this anomaly, that this is my next target up right here at 29.55 to 29, whatever that is now. Those numbers are small, 29.62. And then there's a whole lot of space into my next set of anomalies all the way back to the high, right? This area can get really easily auctioned through. So we know two things. Now, we're at Dalton's gap fill. We know that's usually a response area. But what are you going to do? Now that we know that it held to the tick, you know that you have to front run it. But I probably would have only front run it by a tick or maybe 2 ticks and maybe gotten filled and maybe didn't get filled because my assumption would be that we're going to run a little bit past it. Okay. That's the first challenge, getting in the trade, right? But next the question becomes is how do you manage? How do you manage that trade? And if you're not just going to use big, broad areas, what do you do? So then you come over here, right? So now we know where our areas are. So now we're going to come over to our 3 range chart. Now this is exactly what it means. It's every bar is comprised of 3 ES points, right? And if you look at yesterday morning, see how clear it was when you look at it in reverse? But in real time, it wasn't so freaking clear. I'll tell you that right now. Number one, I had some challenges to this trade. I'm going to clear this out. So this is a momentum indicator for me. It simply tells me the buy pressure and sell pressure in any particular wave, right? And then these are all algos, which I'm not going to go into explaining other than to say they're very important for me to getting trades. So those little triangles that are on top and on bottom, I want those to appear before I look for a reversal, which means I have to wait. If we look at yesterday in the morning, before I take a long, I want to see, actually not on a 3 range, but certainly on a 1.5 range, which I'll show you in a minute. I want to see this bar form right here before I start taking a trade. It's almost a must for me, number one. Next, I want to see this bar form right over here to know that we're going to break away on a bigger range, right? I knew once we closed above this, I had very good chance of pushing to the upside. And said as much in the room. However, you can see it wasn't a gimme, right? Because this is a lot of money in these rotations. Next, as I'm working through this, I'm looking for a head and shoulders pattern. Now that's pretty easy, except to do it in real time, right? So my head and shoulders candidate was over here. I'm going to show you from a 3 range, was this. And what I would prefer to get, and I did not get, so I'd prefer to get kind of an extension below and then a trap back in. That's harder to pull off on the 3 range due to range constrictions that ES has, right? So I knew I wanted to close underneath it, which I did, and then I wanted to close back into it. Okay, so now I have a little bit of structure in my decision making. I know this is support. Why do I know that's support? Well, there's 2 things going on here. Number one, I know this is support because I can visually see that people are buying in this area all the way through Monday, all the way through the European session, all the way through the Asian session, and now we're trying to break what we're doing. When you hear about stop runs, this is taking out the stop run, right? So next thing that has to happen, looks like a potential impulse move off the left. See that right there? That looks like an impulse move to the downside. Again, it's so easy when you just look at a particular little tiny structure and go, well, look how it worked out. But realistically, if I take this to this, right, and draw a line across there, that served as my resistance. Not only that, but if you know much about trading and patterns, what you know people would be looking for potentially is a B, C, D to the downside, right? And we have, by the way, if you look back, there's plenty of room to go back to the downside, because when you look at this, we haven't even made it back to the big picture 50-60. I use the 50-60s a lot. I'm going to draw it up here. It's actually a little bit higher, but close enough. We just couldn't tag it, right? And we couldn't tag the structure over here to the left. So thinking, hey, it's short and we're going to retrace into the 50-60, the Dalton gap fill only looked obvious after it held, is what I'm trying to point out. But while we're looking at it at real time, that's when we start going to structure, right? So if you look at it yesterday, what I would have said and what I would have done, and I do this in the room every day, is I would have said potential left shoulder, but also I would have come over here and said potential left shoulder. Now you have some thinking to do. The best left shoulder would have been this one, break below and get above, but it never got there. Therefore, it had to be this. Next, once I have this, I don't want to close below this bar. So remember, I'm going to take this to one more level lower in my decision-making process, right? And you'll notice in retrospect now, that worked out quite cleanly, but I want to show you something. That only worked out quite cleanly. It worked out at 10 o'clock. You could have taken the backside test to that area, but it only worked out cleanly in the last, really, let's call it the last hour of the day, right? You had to know that that was going to hold. And I don't trade off this 3 range. I use it to set up the bigger picture. And what I know from this is when we were rolling down in the morning, right, that my nearest fractal originally was all the way up here, triangle up, and when I got behind it, I now have 2 key areas, and I go over this with the room, right? When you push up, you've got 2 areas, right? So see how they held? They couldn't get a close behind the 50 retrace, but then they kind of nosedived behind the 50 retrace. And if you're only using that 50-60 for your decision-making purposes, you had to recognize that there was a left shoulder in over here, and that it was everything from that 2900 all the way down to 2894 was your support level in that, and you had to recognize that. And when you're trading, so I'm going to take it down one more level in just a second, all right? When you're in here, right, so this is what you're looking at as it's rolling across, and you're like, well, we tried to break above. We've constantly had resistance out of the 50 retrace. Mentally, you're going, no, that's kind of bearish. I know if I get above 29.14 and I wrote as much, we were good to go. But until that point, that was a little bit challenging, right? And you could have looked at this totally a different way. You could have said, look, we've challenged this 1, 2, 3, 4, 5 times, and we can't get above. They're going to crush to the downside. Here's what you had to recognize. Okay, the pattern has been, each time we've gotten negative news out of China, the most recent negative news was the story floating around Monday was that we could not agree on even a meeting place or time to begin negotiations again, right? Now, if you look at what's happened every time there's been a negative, negatively shaded article, we've had big bone crushings to the downside. So what you had to look at, you had to go, hey, wait a minute. We bounced off this low right here. We bounced off because Trump said during the G7 that China approached him and wanted to resume talks. That's what launched that to the upside. Now we get a news story. We can't come in and we can't get a meeting time set. We can't even agree on that. What you would have thought would have happened, and what I thought would happen, would that this market would just get crushed to the downside, right? And it should have easily happened when the market was uber thin, but they couldn't get that done. Right? And then when they did make the dive to the downside, right? So what you'll notice in here, there's a couple of key factors. See how this is the biggest push down, right? This right here is the biggest push down when everyone's back from a holiday. This one took place on Monday, right? No one was really around. You can see that there's just a big increase in selling. And on that big increase in selling, we can't break the low to the left, and we can't get back to the 50 retrace. That's curious, right? Now, when I say that, that's totally cool. My years of coaching people is that is very hard to bring to the forefront of your mind when you're totally focused on getting the right entry. Period. End of sentence. No question about it for me. That is very hard. But then if you look at the structure over here, right, so you come to the right, biggest push down, and then something else interesting happened right before we get this giant lift. We had another giant push down. This is where the algo helps us enormously. Giant push down. And even though I couldn't figure it out, I sure as hell knew I didn't want to be short, right? Giant push down, higher low, right? And holds the left shoulder. As a matter of fact, this is picture perfect if you're looking for head and shoulders. Tons of sell pressure into the left shoulder and not a tick below the left shoulder. That is what I am trying to keep my awareness of during the trading day. Just like I would have said over here, right? You had a potential head and shoulders, I would say, off of here. And on the right shoulder, it held, right? This became a competing head and shoulder. I don't know if y'all can see that, but it's there. All right, it was either this and this. Oops. This and this. There's nothing magical about a head and shoulders other than you have to work to identify them and see when they're setting up. That's all you're trying to do, right? So that gives the case, and then you finally figure out at the end of the day. So there was one other clue that we had at the end of the day that you couldn't have seen if you just saw ES. See how we get this giant push, the sell wave, and they press in and they can't break the low and they hold the left shoulder? If you look at NQ at the same time, which I've thrown back up on my screens, what you'll see is, yes, it's already, it'll be right here. I don't know if my drawings are still there. They're not. Okay, this is the same time frame. You see this right here? Here was your, let's erase all the pretty lines on there so we can rework this. There we go. So if you look, here was the morning low. Here was that big push on ES. Notice I'm not even looking at what the data feedback is over here, right? There's the push on ES. And something really curious happened there. So see that picture right there? We clearly broke the low. We clearly closed back in. But NQ broke the low and ES didn't. And if you've been trading for any period of time, you'll notice that when one market breaks a low, the other should follow. And if it doesn't, and the other market that broke the low closes back in, it's usually a total trap. And that's what launches this squeeze to the upside on NQ. It was actually quite a monster trade for anyone who caught it, right? So what you didn't know from just looking at ES is that while it held a higher low, NQ broke the low and then trapped back in. And that trap back in is what fueled this run to the upside. That's what started that fire. Again, I try not to trade that late in the day, but it was clear that it wasn't short to me at that point. All right, so now let's go take one more step backwards because there was another challenge that you had on ES. And it really set up the day quite nicely, even though, again, I did not execute as well as I wanted to. Yesterday was actually kind of a mediocre day for me. I got paid on CL a little bit, but I didn't get paid in ES, which is why I like to use it both for the people I'm coaching and for myself, because there was areas I should have and could have improved upon. Right? So now I'm going to take all of that picture that I've built up in my head, that I've done from doing my homework and doing this day in, day out over the same charts. So I start to learn, right? Hey, these are the patterns that work. These are the patterns that aren't working, and they'll slowly shift over time. Right? So if we look back into yesterday, we're going to have something very, very distinctive that was not revealed in the larger chart. You had to have this very kind of smaller granular chart to be able to see what was going on. Right? And if you look in the morning, the first thing I pointed out was that we had this massive push right there, right out of the gate, this right here. And I was like, wow, look at that. And it only had one element that it was missing, and the algo didn't fire on top. I was looking for a little triangle to fire up here on top. Didn't fire, right? But I had everything else except I also had economic data, right? So I had this as left. To really seal the deal for this, if this had printed one of these little triangles right up here, and then at this point I needed to break, this is what I need to break to get underneath that, right? And this is highlighting that wave. Now this tells me without me figuring out anything else. There was a massive push to the upside here. They failed to hold the old swing high if you look over here to the left. Right? They tried to push above. And you've got to think about that when you're trading, right? Hey, if someone put that much effort in to pushing up, if you get underneath that guy or that gal, whoever it was, they're kind of screwed. And it's not just a little bit screwed, it's a lot screwed. You've put in all your capital, you've gotten by miles. Like look at the size of that push. That is a giant push to the upside. And I can tell you when I see that and everything lines up. So what happened? That's at 8:57 in the morning and we get swept on, I think this is a response to econ, right? But it was already set up to roll to the downside anyways. It just, and this brings up an important point, right? If you'll notice, as I'm describing this, I'm looking for a particular set of structures and a particular set of sequences to occur to go, oh, I know I usually make money when this happens, right? And so I'm not trading the market. Now, for a lot of people, you can go, I had almost everything. And what you have to do is kind of create a checklist for yourself or a threshold checklist. I need A, B, C, and D. So number one, I knew I had to get underneath this point right here to break lower. I wanted a little triangle to print on top. I didn't get that. I got everything else but that. But that's pretty important in my trading. And I would have liked one of these green arrows right on top, right over here, and I didn't get that. I would have liked this to appear about right there. I just didn't get it. That's not as important to me as everything else, but it's pretty important. But if you'll look at that point, I said all day long, and I want to reiterate for those who are in the room, I did not execute on this at all. Zero, right? On the short side, I stared at it over and over, and I just did not hook it up to the short side yesterday, or to the long side for that matter. And I missed my CL long, and I'll show you that in a minute. I missed what turned into a 100-tick trade, and I missed it literally by a tick. So it was a mediocre day for me. So first of all, you've got this big run to the downside, right? Remember, down here we have a couple of things. Dalton's gap fill is sitting right here. There's an anomaly sitting about right here, I'm guessing, and the 50-60 is somewhere right in this area. So all of this becomes an important area. And this right here would usually make me quite bearish, right? I see this, I go, hey, I get underneath. And there were some areas if I wanted to be aggressive, I just wasn't, right? I could have come right back in on the backside test of that and should have, quite frankly, and shorted that right there, right? That was pretty direct setup. I should have taken that. We come right into Dalton's gap fill and we get the response. So what am I looking for again? So this time I want to get above this triangle. I need a left shoulder and a right shoulder, and it was just sloppy. It was still thin. So see this? Left shoulder, head, didn't extend down as far as I thought it would. So I need to trap back in here. I'm going to put a line underneath that so you can see it. And I'll just put it a different color. Let's stretch it out. So remember, I already know I'm near a support area because I have Dalton's gap fill there, right? And I have that anomaly right underneath, and I have the 50-60 right underneath. So that's that blue area. So if this would have been in a perfect world, what would have happened was that this bar would have never closed underneath this left shoulder. So it doesn't always happen, but it happens often enough that it's worth focusing on. It was sloppy at the time because of the response and the algos, and it was thin, and that's why that ended up happening. But if you look, what happened is we ended up with this triangle up, which tells me I need to get above this triangle to push to the upside. And I had multiple opportunities to take this trade, and I just did not take the long or the short. I was totally disappointed, but that's not a problem. I didn't take a bad trade either. I just didn't take the good trades. And it gave me areas to improve on for today, which, by the way, worked out quite nicely in the morning. So when I'm looking at this, I go, I need to clear above this to know I can break free to the upside. This is still potentially my left shoulder, but it's gotten a little sloppy now. So there's two other things that I can look at. When I came to the downside, see how this is my biggest selling wave down? Right here. And I said that's going to create a conundrum. Once I get above this, right, I'm likely to short squeeze because you'll trap all the sellers that are below. But the problem is I'm going to slam right into the buyers that are sitting above that are trapped. And that's exactly what happened. If you look at that, we get above, They squeeze everyone out, push, and then reject out of here. And then I was left between the biggest push down and the biggest push up. And that kind of threw me for the day, right? And I came up with a solution for that problem, by the way, and I'll address that at the end, right? So the solution to whichever one of these two waves is the biggest wave, until you get other evidence, go with the bigger wave, guys. That's the easy answer to that question, right? So now, if you look how the rest of the day played out, we now get above this right here. So then, once I get above, I can go, hey, where's my 50-60 back in? That's right there. And if you'll notice, that lines up with not closing underneath. So that's the bar that generated the algo signal that I needed, right? Notice that we don't ever close underneath it. See how none of these bars have a negative close underneath. So the gray are down bars and the blue are positive bars, or the light green are positive bars, okay? Obviously the reds are negative bars as well. So that was an opportunity to take along right there, right? Notice that we, guys in the room, we don't get wave one, wave two. We then push off. So I miss all of these entries, and I did not take the entry first time into this location, even though I could have. The solution to that problem was take the 50-60 back, right? And simply close it if we got a bar that printed underneath this algo signal that was generated. Pretty simple, and that gave you the push to the upside. On the push to the upside, you go with the same premise. All right, if you look, what we need is two things. If we erased all this, I go, number one, I know I have all these buyers stuck. So I know I'm looking for an excuse to sell. So notice first thing, guys, the speed bars that get generated by the algo, right? Every one of those. 1, 2, 3, 4, 5, what wasn't inside there, so I take it back. All of them within this gray area, which was within this buy wave over here, all of those generated profitable trades. Not one of them stopped. That was a 1.5 to 2 point stop on all of those. So that was an immediate area for potential improvement on the trade, right? Where I could have gotten the roll to the downside. Again, I didn't take them. Number two, in order to break down, I know I had to clear these little triangles. They work the same way, right? I'm going to break. I'm going to have to close below this guy, right? And then I'm going to have to get behind these bars that are shifting up. So notice, once I finally got a shift up near the peak, and then I get a shift down behind that right here, that's what releases us. But look what it releases us into. Right? See that giant push down? So when you're looking at that, isn't the first thing you would say, so what this does, I'll draw this up. Let's color this up. I know there's a lot of drawing on here, but this is how it evolves. That's the 50-60 retrace right there for the day, from high to low. Right? From low to high, excuse me. This is the area we're looking in, right in there, to get a response. You get this giant push, and it actually squeezes just behind that 62 retrace. But once it closes back in, and you have this wave right here, this is the biggest push down. Now, you should have had two thoughts on the day right there. I know I did when I looked at that, which was, wow, that's a really big push, and it fails, right? And if they don't get below them, they're going to squeeze them right back up, and it's exactly what they did. And if you look as we come back into the afternoon, we push right back in here, and we just do this meandering through lunch. And I didn't trade through lunch. The high actually of the afternoon of the midday session came in lunch, and I didn't take a trade. Now I want to show you something, guys, for those of you who are familiar. Right? If you waited patiently in here, off the top, you get wave one, wave two, right? That doesn't set up that often. That produces this. The backside test, again, you have to have the stop behind the top of that wave, produces your big roll down. That was a 29.06 for a 29.94 rotation lower. That was right at 11:30. I don't trade that time frame, so I didn't get the setup, right? Now look at what caused that reversal and why we flip on two different time frames. See this, how it doesn't look like it's anything extraordinary right here. See how this, we have the biggest push right here. you know if you get above that biggest push, so I'm going to erase it and bring it back into the afternoon. All right. The important thing for the afternoon is that if we're going to fail, right, this is from the AM. The market clearly decided that was the left shoulder. You're going to have to break that left shoulder. First thing you notice is we test in. Secondly, this is the biggest push down at 1230. I was getting tired. I did not recognize that off this range yesterday afternoon. But I know one thing. If I get above that, everyone who sold underneath it is screwed. And that is true. Next. So see that picture right there? Kind of hard to tell, right? Kind of hard to tell from that that was going to be the low. But if you have the 3 range over here, same picture, same time. Oh, that's gold. Let's get rid of that. Where'd the other picture go? Am I hiding it back here? Let's see. Nope. Put that back up and find my GC. Hold on one second here. GC 5 minutes. There we go. Oh, sorry. Not that chart. CS 3 range. Ah, there we are. Drag that over here. So if you look at that same time frame from yesterday, there's that same 12 to 1230 placement right here. Let's do this really quick. Window, toolbars. So now all of a sudden you see it on the 3 range, you're like, wow, that's the biggest trap back in. And off that 3 range, you also clearly see, right, that's where the head and shoulders trap came off of. That was your test to the tick to the left shoulder. Right shoulder, biggest push down. And then when you get above that biggest push down, they actually backside tested it to the tick. This was in early Asia. And then they lifted it, right? So I don't trade Asia. I didn't get any of that. And it did frustrate me that I didn't get any of that actually. But that tells me that there's areas, even though I sequence these every day, I usually get tired about 1 o'clock, right? 12 o'clock, you can only work so hard for so long. And I start pretty early in the morning. But the point is that there is a process and a method for seeing, hey, where are my bigger trades going to come from? They're going to come from getting above biggest pushes down. They're going to come from, if you get underneath, a big push up. So see how that big push up that we were using as resistance actually ended up breaking the top part of this, right? That ended up being this on the 1.5 range. This is what we were using for our resistance up to 29.14, right? Was the top half of this push right here on the 3 range. And it worked. It worked beautifully actually, right? And you'll see that they were using this as the left shoulder right over here. See how they tried multiple times, but they ended up using that the left shoulder. I didn't know that at the time, but you can tell from later on, right? And as soon as you close above, bam, that was the launching point for that move to the upside. So to go back to where I started, how do you know you're about to have a big trade? Okay, how do you know that you have a big trade on your hands, that it's going to roll and push hard to the upside? The answer is you're guessing a little bit. When you come into this, and this is the picture you're looking at, right? And you know NQ hit a new low and ES did not. And you're pressing into that 28.94 right here. You're looking at that and you're like, wow, there's the biggest press down. And they're pressing right into that left shoulder. And I do this in the room quite a bit, right? I'll come in and I'll buy 28.95 and just put a stop 1 or 2 points below here and go, I hope it holds. B, I can start off with a normal size trade there. And then when I get above that area to the left, I can add on this backside test. What do I have to do in order to do that? That moves my average from 28.94. If I buy at 29.02, that means I'm going to come out with about a 29.99 average now. So it's challenging because you take a I have no idea. I don't Retro Beast, I do not know I don't think in the market that terms. I literally get it down to just mechanics, because otherwise it interferes with my thought process. So I don't know how else to answer that question. I try not to overthink it beyond what I'm looking at. So when you get down into this left area, you go, hey, I can take this for an uber tiny stop. So you have to know two things. A, how many times does this set up? Well, if you've been in the room, it sets up a lot. I can tell you that right now. It doesn't just set up a few times. It sets up a bunch of times. Sometimes you get stopped, but then there's a second key to it, which is number one. See that little algo triangle that fired? I know when I get above it, I have a good chance of pushing, just like I know over here, just like I can see that. And sometimes it doesn't appear. See how it doesn't appear here, but when it appears here, I know that I have a very good chance of seeing it. So if it doesn't appear, I'm kind of left with a well, maybe. But I know I have very little risk. And then I'm just looking for a backside test into a key area to hopefully add to a trade and really oversize it. Now that's me, right? And if you look at every trading book out there, they're going to tell you, don't oversize your trades. Don't do this. Don't blow up your account. I do not trade that way. I mean, I don't blow up my account, but I don't trade that way. I'm really looking to get all the elements combined together in kind of perfect harmony and get a little bit of luck and get what's hopefully very low risk entries for very high RR rewards, right? And I don't do it perfectly. And here's the cool thing about that. Even if you don't do it perfectly, or you get tired, or you miss entries, if you just keep doing that over and over again, looking for your high odds setups, recognizing, because hell, anyone can look at this and go, oh, I should have bought 28.94, no joke. But when you're over here, the whole point of what we're trying to do in the room is go, hey guys, all right, this is a potential, this is a potential, this is potential. So once I've got these two components right here, and I go, hey, I've closed in, can I get above my waves? What's my resistance above? What do I have to break to get out of? And can I make this work? And then what changed the whole pattern of making this resistance was this huge push to the downside, right? See how everything flipped? Not in me, the market, right? Made this huge push, couldn't make any progress. And now all of a sudden, everyone who was shorting all up here, once we broke that 29.14, it was just gone. But in order to see that, you had to know what the sequence would look like. Again, really important. You have to have the mental stamina to see that large setup. Otherwise, all you're left doing is constantly scalping in and out. Now, I want to show you what I saw on CL, even though I missed the trade. I actually entered it not once, but twice, and didn't get filled either time because I was just off yesterday. But on CL, and I'm going to tell you how I responded to it. On CL, see how I have it marked off? I was working on this being a potential left shoulder and this being a potential left shoulder. So I was missing some qualities on this. Number one, I never got the algo signal up here, but I did get my little arrow down, which can be used as a substitute, right? Secondly, I see how I have it marked off at 53.59. I knew that was my breakout point. Again, I drew that yesterday. And then I knew my other potential left shoulder was this over here, but I really hated that. I really wanted this to be my left shoulder so that my stop. And then what I wanted here, right, was I would have hoped I could have gotten one more opportunity for it to press back in like it did on ES and then push out. It doesn't always do that, and the reason why is we got this wave over wave structure, and that doesn't matter. But that was the big picture, and I knew that if it was going to test back up, this was my first target, and then this structure up here was my second target, right? So coming back to it, when you look at the smaller range from yesterday, which I go all the way down to a 9 range, 6 range, 7 range, 8 range, 9 range, it just varies by volatility, right? But if you look yesterday afternoon, okay, here we are. Oh wait, wrong product. There we go. Yesterday afternoon, again, I knew we could have a potentially big trade here. Why? Number one, if you look at 53.03, we have bounced off of 53 multiple times. Remember how I showed you that big wave up on top? So if you look, right? This was pretty easy pickings right here. If we get a backside test of that, that was a pretty easy short. Unfortunately, it took place at 2 and 3 in the morning, and I wasn't around to take advantage of it, right? Rolled all the way down, but look at the elements that we had. So you can see I was marking it off already over here, but I'm going to draw it out for you. Okay, so what am I looking for? Number one, I need a potential left shoulder. And again, yesterday was kind of funky with the volume. Usually it would be right on point, came over to the right a little bit. But when I look, I'm going over here and I'm going, okay, number one, I need these little triangles to start forming on top. Why? If I break above, I have a good chance of a clue of breaking to the upside. Number two, I need a potential left shoulder of some sort. And that would be this, right? And it would go right there. Once I got above it, I wanted it to hold. And you'll notice, so I'm going to blow this up so everyone can see it. See this right here? How once we make an impulse move above and we backside test it, that was also a 50-60 retrace. Okay, but there was more elements in here that I wanted to get, all right? So B, if you look at the size of that push-up off the bottom, it's huge. We haven't had one since early Friday morning, that back, and we get back-to-back big push-ups off the bottom. When you see this pattern off the bottom, just know that they're probably about to take it the other way. Very, very likely. B, what I'm trying to get above is I'm trying to get one of these triangles to form as low as possible, which I get that, and I get the close above. And now I'm targeting, or I should have been targeting, the backside test again. I was a little bit off yesterday. And when we get to this, I realized it too late. When we got to this 53 right here, and I didn't put all the pieces together. I guess I was asleep at the wheel, but and so the first time we popped up here, I tried to grab 53 and it didn't go. And then I came in right here at 53.03, and the low was 54.04, and I didn't bump up, and I just missed the move. But that is a picture right there. Look at all the elements you have there. Traders are buried deep in the hole. We're on, from a daily perspective, and here I'll show you this. This is off a very large time frame. Each bar represents 30 ticks. Okay? Look how many times we've come off this area. Like this whole area, everything between 54 and 53, has served as strong support. They did violate that left shoulder a little bit, but not by much, right? And if they were trying to make this a left shoulder, and really in an ideal world, we would have come in and actually created that as the left shoulder. They ended up making this the left shoulder, and that's what frustrates people when you're looking on the fly for head and shoulders. It's obviously clear afterwards. It's just a little bit of an art identifying them in real time like this. But and that's why you'll always see me in the room call out potential left shoulder and head, because I really want to focus on these right shoulders. That's where these big trades come from. I'm trying to be patient, right? I'm trying to grab trades out of this area for scalps, but these areas right here on the right shoulder, when the algo sets me up, this is where I'm trying to set up as big a trade as I can humanly manage without getting stopped and taking a serious drawdown in my trading account. And then I'm holding my breath for the push out, right? And it's got to come during the day session, which makes that 30 range harder for me, right? But I knew from 53, there was a lot of support there. People trying to short to break this support, right? You can see how much effort they've been using at the lows, right? Look at the pushes at the lows that have been failing repeatedly. And you get this giant push right here at the low. That's why when it broke free over this level right here, it was a short squeeze back up, and it's happened repeatedly. So you take that knowledge that they've pushed real hard, and there's been repeatedly someone absorbing in that area, and then you take that and you combine it with, and Bill, who was trying to be very kind to me yesterday, was like, don't beat yourself up. And when I look back at it, and I wrote in my journal last night, and I wrote, it wasn't that I was beating myself up, it was that I wasn't quick enough I wasn't on the ball to put all the pieces together. I just didn't see it. It just wasn't clear to me, right? And that's okay, but it is frustrating, right? And especially when you look at the aftermath. Although I know I'll get my fair share of those. Additionally, when you get two momentum waves like this back to back, and you get the second one to close over the first one, we just see it all the time in the room, all the time. The problem here goes back to a very fundamental issue. The stop is technically behind 52.84. So if you take 52.16, you have to be able to figure out how to manage 5284 or find an entry within here. And I did. I found that 5304. I just couldn't get filled. And I was using a dime stop or a 12-cent stop if memory serves. The point behind all of that, guys, the point behind all of that is this. The guy with $1 million just would have looked at this right here and gone, I'll take my one contract here. I'll stop right below, because his loss would have been $250, $300. He wouldn't care. But for guys that are smaller traders or guys that are larger traders but using a lot of leverage and everyone in between, right, you've got to be able to pinpoint your trade. And when traders come into the market and they start trading and wanting to make money, they want to know two things. How do I make money? But the second part of that is, how do I not give it back? The way you don't give it back is you get really specific on what your entry process looks like. So this had almost everything we were looking for, right? It had left shoulder, had triangles down at the bottom, algos firing, had triangles at the top over here, had an impulse move above, had one wave, two wave, had a 50-60 back after it established above the last triangle to the upside, and you see you got your shift up over your last shift down. That was the other clue, along with your 50-60. I put that all together at the last minute and still missed my entry by a freaking penny, and that sucked. But that's how trading goes. There was another key element to that. I find a lot of traders, and I mentioned it this morning, I'll say it again, when they miss a trade like this, and I responded because I can show the sequence, right? Because I was uncertain, I couldn't put all the pieces together, and I got mad, is what happened. When we were over here, going into the close, right about here, I'm totally cool till right here. And I was like, he just screwed me out of 70 ticks. I don't know who it was that screwed me. It was probably myself for not managing the trade correctly, but I was mad. And I thought I was the only one who does this, but as I spoke to more and more traders, particularly retail traders, they get mad, and what you decide is you're going to start shorting it. And let me tell you where I kept my money yesterday. Remember the elements I need? I need a triangle pointing down, a triangle pointing up. And I said in the room, I am looking for a CL short. And I said, they have been pushing it into the close every day. And my thought, now you got to realize, I totally made this up in my head. I decided that since we've been pushing up into the close every day, that yesterday would be the day they were going to push down into the close, right? And so what I said was, I'm going to short it the first opportunity I get, the first opportunity I see, as long as it was before really 15 minutes to the close. And what I needed was I needed to see a series of downward facing triangles, and then I needed an upward facing triangle, and I needed the opportunity to at least think I could get below it. And what saved my backside yesterday afternoon and let me walk out profitable instead of losing money is not a single short setup in my process came in. And the way that was shifted, right, was I have this little checklist. And before I take a checklist, I had to have at least 3 things that'll let me say, hey, it's okay. Whether it's getting below a wave, getting above a wave, I need at minimum the little triangle pointing up, and I need a triangle pointing down or a shift, one of the two. And I need structure to work off of. And what that did was let me process my anger of I missed a big trade to oh, I didn't get run over at the end of the day, thank goodness. Because the only thing that sucks worse of not getting filled almost at the low before it rolls all the way up is deciding that you're going to turn contra after having the right decision. And originally I thought that probably happened to 20% of day traders who are retail. My guess is going to be at 60 to 70% of people get mad. And what they do is, well, I missed the long, I'm going to damn sure catch the short. And it also saved me today, right? If you look all the way through here, by the way, when we came in on the day, CL was on rails all night long. And the first thing I said is, number one, our normal scalp setups will run us over on trend day up. So you had to know to keep up. And secondly, what you would have noticed was really interesting today. So these give you a ton of information. See how from early in the morning, see how we can't get below these pushes down? That's telling you selling's getting absorbed. See that? They're pushing down. They're actually pressing quite hard on the sell side. And notice that each time we get above these guys, right? Above, short squeeze. Above, short squeeze. Above, short squeeze. And that's a tradable trade if you can tell that you're on a roller coaster in a market that's on rails to the upside. I don't like this trade. It's not in my trade selection of trades to take. And the reason for that is it gets me in the habit of trying to chase momentum up when the majority of the time this is a two-sided market. So I focus on catching the markets where there's turns available, one way or the other. There's nothing wrong with trading this. You just have to have the self-discipline to know that this is about a 10 to 20% of the time type of trade. And I don't have the ability to flip that easily. I get emotionally connected to the trades. And so I just have to take that trade completely off. But again, no pain at all for me all the way through here. And all day long, a properly set up short never set up. And yes, we did roll significantly off the top eventually, and I had that as a potential short area. I had all those levels up there. Here, I'll show you. That's what those yellow lines are up here. These were all potential areas of short possibilities, and there was a huge point of control from this I had drawn out earlier. I don't know where it went, but it was basically this, and this was a target. And then the 161 extension was 56.75. We didn't quite hit it, but it was right up here. And we just missed that. I think we hit 56.68 or something like that. But nothing set up. And then the other thing that saved me is notice on that 30 range bar, we haven't closed up until this point. This is the first bar that closed below an up bar on a 30 range bar since 10 yesterday morning. So it's been 24 hours of straight up. I don't want to short a market like that. There's no reward in it for me. There's just total anxiousness and getting smoked. I don't make any money doing that, right? And it has to follow a structure. First, I need a left shoulder. So my potential left shoulder is all the way the heck over here right now, right? Let's see if there's anything else. Or my other one is up here, which would be great. I'd love for it to get up here and then trap back in over here. But either way, I'm nowhere close to getting the left shoulder. So either this becomes my left shoulder or this becomes my left shoulder. Those are my only candidates. Otherwise, I'm without a trade in this area. And that's totally cool because that kept me, well, it didn't get me on the long side, but it kept me totally off the short side today. And hence, that saves a ton of money in your trading. So, to be clear, you don't have to hit a lot of these to make a lot of money, right? You just have to have an awareness of where they are. And when you miss them, instead of trying to go and catch something, which is I know it's my total instinct. When I miss a trade, let me go catch something else, right? Let me go take it the other way. It's going to roll the other way. Instead of doing that, go back like I did it, like I do almost every night and go, what was the major trade idea that I could have improved on that would have had a dramatic difference in my P&L, the trade I could have stacked or loaded size on with relatively little heat and great RR. Because I'm a good day trader. I'll tell you right now, you can sit me in front of the trade and just using the monitor, I can trade this thing all day long just using the dome. I don't even need the charts. I can tell where support and resistance is because that's how I learned trading 25 some odd years ago. I had level 2 monitors in front of me and I could see just from the way the market makers were reacting where the support resistance is. As I've gotten older, the ripe old age of 49, I have noticed that I spend an exorbitant amount of energy trying to capture 2 or 3 points in ES or 10 or 15 ticks in CL, which there's nothing wrong with that. But then I exhaust myself for when the bigger trade comes in. And the bigger trade can be identified, has a massive impact on your bottom line, and reduces the amount of stress you have to deal with in trading. So all of those are big benefits. The last piece I want to leave y'all with here before I go, and I would start, if none of this made any sense, I would start with Mind Over Markets and look at some of Dalton's videos and have someone coach you. It's worth paying someone to coach you, quite frankly, because volume profile and TPO is simply a backbone to your bigger trading decisions as a day trader. And on your own, I can honestly say by myself and with coaching, it took me 4 or 5 years to get really good at volume profile and TPO profile. And I'm still not great at it. And I've been using it since 2002, I think, and I'm still not great at it. But it just takes a long time to understand the ins and outs, and then taking the pieces that you understand, applying them to your emotional structure and your financial structure, meaning how much capital you can risk and how much capital you have to work with, and then understanding where your best trades come from. And then the last piece is your head part, right? if you're frantic, if you're trying to capture everything, if you're trying to trade every move and the market determines what you are or are not going to trade, you are probably screwed as a day trader. On the other hand, if you use structure to determine what you're going to trade, you probably have a really good chance of making money, right? Because you're going to let the market dictate when the opportunities are present, and you won't worry about it otherwise. So if you look here on top, right, we know that we have a Fed speaker. It's 5 minutes to the close. But what did we need to get a good short in? Well, this wasn't going to work over here because you needed this to be, that was the closest thing you had to a left shoulder, right? And you can see it never got violated. It got tested, but it never got violated. This was your potential head, right? But then you had your trap was all the way the heck down here. Like, how are you going to pull that off, right? You can see someone try to hold it, but look at the ratio of number of points from your head to your shoulder, right? It was just, for me, unacceptable, right? It was just too freaking big if you look at that. Secondly, one of the key elements when you come on a day and you see this running up like this, you'll see days that fail. We get behind the 62 retrace of whatever the move was off the low. And you can see that wasn't even the low. That was just the low, I think, was back over here. But even with that, we come nowhere close to the 50-60 on trend day up. On true trend day up, we will not even touch the 50 retrace. Okay, and when it fails, we'll get behind the 62 retrace. So if this is your candidate, none of these could be your candidate for your left shoulder, right? So now we've gotten here, but we didn't close back in. Excuse me. Oh, I guess I want an hour. I didn't intend to do that. There. So at the minimum, I need an impulse move underneath. And then what's the key sealer for a roll to the downside? And I'm going to show you. Even if we could pretend like there was a head and shoulders, usually you'll get the algo to fire up a wave over wave setup where you can take the backside test of that wave A for continuation of the downside. That's the only thing that's set up, and if you were willing to take that at 8 in the morning, I wasn't on trend up overnight. That's the only thing that's set up short today. And then what's set up long, here I'll show you, off the 5 minute chart, which is generated off the TPO. Oops. This is the only long we took. And I was medium in confidence on it. And it was that yellow zone right there. And we focused on the yellow and white zones. You can see we played ping pong between the two of them. I was long half size at 29, 22 and 3/4. I think I scaled most of it out at 29, 25 and 3/4 maybe, or 29, 26 and 1/4, something like that. And then I closed the rest of it right here at 29.32, 29.31.75. That was the only trade I had today. That was it. CL never set up, and I wasn't willing to short ES, and gratefully so. And remember, again, going back to mind over markets, when you gap, failure to achieve half gap, failure to achieve gap fill, failure to trade back inside prior day's high, almost always indicates that by the end of the day, they're going to find a way to push out and up. And that's exactly what they've done. We're now above that white zone. And this is the current swing high area, that 42 to 44. We're still in balance, but it's on rails today. It could easily fail tomorrow or Friday, but we have the Fed chair on Friday, and they're probably going to drive it. My guess is we're going to kind of grind right into the Fed chair. It's just a guess. I'll trade whatever sets up, but that's my guess. So we're in the right area if you're a swing trader and you think we're bearish. You're in the right area to start building a position, but I do not have anything that tells me to do that yet, other than being in the area, and I need all those pieces to come together, and I don't have any of the pieces I need to start aggressively shorting anything here. And that is what keeps everyone in the room nice and safe. And once you have your structure, once you have your patterns, right, then you can start working on your head game and figuring out what it is that keeps you from, once you know what the proper trade is to take, you can then start figuring out what it is that you are doing incorrectly and to stop the bleeding in your account, and then you switch your focus from stopping the bleeding to where are my bigger swings and how can I get paid on those. So I will open the room to any questions anyone has. I think I covered that pretty damn detailed, actually. Anyone have any questions? Randy, Ron, Victor? Okay, went way past what I intended to go. I appreciate it. If you have any questions, you can email me at tradeandperform@gmail.com. It's TRADENPERFORM@gmail.com. You can make a lot of money day trading. You have to know what you're doing. So, anyways, that's my 2 cents. I'm sure so glad I'm not short anything today. So, have a great night, guys. Trade smart, and I will be back tomorrow. See y'all. And that is that, guys.